A reverse mortgage line of credit could be the smartest financial move you've never heard of. Well, in today's video, I'm going to do an in-depth discussion about the reverse mortgage line of credit, how it works, what are some considerations and drawbacks, as well as give you some specific examples for seniors of different ages. And when we're done, you're going to see exactly just how awesome a reverse mortgage line of credit could be for you and your retirement. If you're new to the channel, my name is Emmett Dempsey. I'm a licensed mortgage broker here in the state of Florida, and I've been helping families finance homes for the last 17 years or so. And reverse mortgages are a focus on my practice and as well as this channel, so as you can see. I've helped dozens of reverse mortgage clients use a line of credit to access their home equity, including my own mother, who I did a reverse mortgage for before she passed. It was a game changer for her. So it's definitely something I believe in. All right, let's go ahead and get into it. Okay, so what is a reverse mortgage line of credit? Now, the line of credit is one of the many payout options of a reverse mortgage. Now, most traditional reverse mortgages are the HECM or the home equity conversion mortgage offered by the FHA. Now, it allows seniors 62 or older to convert a portion of their home equity into cash and have no mortgage payment. So that's the basic benefit of a reverse mortgage in general. Now, I did an in-depth video of reverse mortgages explained here. You can kind of check that out. Of course, watch that if you have any questions. Of course, after this video, of course. The amount that you can take out in a line of credit will depend on a few different factors, namely your age, what the appraised value is, as well as what are long-term interest rates. So basically, the higher the interest rate, the less you can take out. Lower the rate, more you can take out. Now, today, it's November 2024. Rates are in about the high sixes, which is basically higher than they have been over the last few years. We had some artificially low interest rates. We had a good string from 2020 or so for the last 2-3 years, but now we're in a higher rate environment for long-term interest rates. So, but it's kind of like a seesaw. So the higher the interest rate, the lower you can take out. Lower the rate, the higher you can take out. Traditionally, the rule of thumb was you can take about 40 to 60% of your appraised value would be your line of credit. However, in today's rate environment, that's about 10 to 20% less. So be 25 to 35, to about 50% or so. So again, get your own personalized situation. You can give me a call. I can kind of run the numbers for you so you can see what they might be. But the line of credit grows over the years. Unlike any other traditional HELOC that has a payment and can be frozen and canceled, but a reverse mortgage line of credit cannot be canceled. Also, with a reverse mortgage line of credit, it doesn't matter what the home's value is. This line of credit is always on your property. It doesn't matter what the home's value is. It always appreciates in value. Okay, so what is line of credit growth anyway? The line of credit will grow with your current interest rate that you start with, plus 0.5% for the FHA mortgage insurance. So it's a trade-off. So in today's higher rate environment, your line of credit will grow faster, but you can't get out as much. Whereas, a couple of years ago, line of credit growth was smaller, but you can get out more. So it's kind of a trade-off. And like I said, if you stick around to the end, I'll show you some illustrations about how that plays out so you can see what it is. In today's environment, the line of credit growth is over 7%. Where are you getting 7% on any money, even in CDs today? So that's an enormous benefit to help grow your retirement assets in your home equity. Okay, so what are some of the drawbacks of a reverse mortgage line of credit? Just like any other reverse mortgage, if it's not right for you and your family, if you don't want to live there, if you don't plan on what we call aging in place, if you plan on moving in the next few years, this reverse mortgages in general are meant for seniors who decide to age in place, live in that property for the duration of their lives. Or if you have home equity that you wish to give to your heirs, and that's your only inheritance that you want to leave to them, then it might not be for you as well. Traditionally, when I meet with families, I meet with the entire family to understand that, yes, a reverse mortgage does consume your home equity and does leave less for your estate, but it allows you to live in retirement. And as seniors are living longer, a reverse mortgage line of credit can help mitigate some risk, like sequence of returns risk, so which I'll talk about in another video, in order to use it in combination with your current asset portfolio. So reverse mortgages, in my opinion, are no longer a loan and last resort. So it's a strategic use to your home equity, and then the reverse line of credit is a huge advantage that you can use. Of course, another drawback are the closing costs. And yes, reverse mortgage closing costs can be higher than normal traditional mortgages. That is a fact. But why is it a fact? Basically, fees on mortgages are calculated off of something. So they're all scalable to what you calculate it off of. So on a forward mortgage, they're based off of the loan balance. So if it's a very small loan, your fees are generally smaller. Whereas a reverse mortgage, they have to calculate fees like title insurance and taxes based off of the appraised value, because that's the potential of what it could be. Guys, the government's going to get their money. So they're the ones who make these rules. So reverse mortgage closing costs are that high because of the mechanics about how closing costs are calculated. So they're not just arbitrarily higher just because they're a reverse mortgage. So just understand that. But yes, it is a consideration. But all your closing costs can be rolled into your loan. And all these illustrations I'm about to show you have that assumption where you finance your closing costs. The only out-of-pocket fee you pay for would be your appraisal. Brings you about $500-600 or so, depending on your area. Okay, let's go ahead and get into scenarios. So I did one for a 62-year-old borrower as well as an 80-year-old borrower. And it's kind of 4 different options. One, if you wanted to do just a credit line or if you wanted to take out some cash as well on a reverse mortgage. All right, so let's go ahead and get into it. Okay, let's go and get into the scenarios. So the first one is for a 62-year-old borrower. Now, this is the amortization schedule. It's one of my favorite documents to provide in the proposal. Kind of has a lot of good information. This is for this hypothetical borrower, age 62. With the rates today, the expected initial rate, 6.75. Roughly how it works. Initial property value for a $500,000 borrower. Closing cost about a 4% appreciation, which is a pretty good assumption. So it's actually pretty tame based on where we have been. Now, you can see here in this scenario, it's basically your interest rate plus 0.5% is what your line of credit growth is. So it's at 6.75 plus 0.5. 7.25 is where that's your line of credit growth. You can see your line of credit starts at 136 and it grows over the years. So you're 62 is kind of what it would be, at 6.75. Now, once you're in your reverse mortgage for a while, as rates come down, you can do what's called a HECM to HECM. That's going to be a subject of another video. But this is just an illustration so you can see the numbers over the years. You can see what your property value is. Your property value grows too. So on the very right-hand side is what your equity might be. And so it projects, 38 years into the future. We're all living longer these days, and God bless everybody. Hope you all guys live a while. So you can see what the line of credit grows over the years. All right. So by year 14, you're at $375,000, assuming you haven't used it yet. So it'll continue to grow. Okay, so let's look at like what if you wanted to take out cash? Okay, so you did an initial advance of $72,000, and so that's the max you can take out, and then but your line of credit is smaller. So it just starts at at $69,000 at what your line of credit or $64,400. Now this is at the end of the year. So it starts at $64,000. So you can kind of get both. You can take $72,000. You can do what you want with it. You can kind of go on vacation or do different things or put it in the bank or invest, do what you want with it. And then you still have a line of credit that's just there as well that you access 1 year later. And this is what I find is the majority of my clients, and they'll do it this way. So you can do, and again, over the years, it grows. You still have equity over the years. And then if you withdraw it, of course, it'll take out of the equity. But basically, it's just a line of credit that grows. Kind of think of it like a credit card. You don't get charged interest unless you use it. So that's just there for whatever you need it for throughout the years. All right, so let's take a look at what if you come in and you're 80 years old? So you've held off. Okay, so what if you just want a line of credit when you're 80? All right, so it starts out at 202. So it's a 202 versus the 136. You can see like the older you are, the more you can get out. All right, you can just see over the years how it goes. Your loan balance grows along with your line of credit grows. But they did a 20-year average. They did up to age 99. That's kind of where it cuts off. Okay. And so you can see here the equity is over the years and for that. Now, and the same thing, equity with cash. So basically you can do $111,000, versus what was that? You can take out $72,000. You can take out more money for that. And then line of credit still starts at 91.2 and grows over the years. And that's a pretty healthy growth, guys. Still at the 7.25 like we talked about. So that's kind of it in a nutshell. If you want your own personalized, proposal, just give me a call, book a call, let me know, and we can help you out. Now that you learn more about the benefits of a reverse mortgage line of credit, how can you integrate them into your overall financial picture? If you watch this video here, I go over ways that you can use a line of credit to integrate with your current assets, how to mitigate some risk in retirement. I think you'll like it.